Hey everybody, my name is Niku and welcome to the Trading Setup channel. Every beginner faces the same problem. Charts seem chaotic, every movement is intimidating, and there's numbers flashing constantly, which is hard to understand. Today, we're going to discuss an indicator that is perfect for beginners. It helps build a strategy and it provides quality entry points without unnecessary stress and confusion. Make sure you watch until the end so you can learn how to fully utilize this tool, which really simplifies the start. And before we continue, I would like to remind you all of the free database resource that I've created for beginners and experienced traders alike. There, you'll find breakdowns of setups, examples of executions, and recommendations for indicator settings in the pinned messages. There's also risk calculation manuals, especially for martingale, that help protect your capital. Everything is completely free and everything is in one place. Link is in the description below this video. But now, let's dive into the details. Okay, so we're going to do things a little bit differently today. We're not going to focus so much on entry points as we're going to focus on understanding the indicator that we're going to use and understanding how we can combine it with other indicators to start building our own strategies and find decent entry points. Today we're going to look at the ADX. I have done a video on this before, but this is one of the most valuable indicators that I think exists. I use it every day in my daily trading. I cannot trade without this. Once you understand what the ADX is showing you and you understand how to read it, and then you can start combining it with other indicators and you will find that it will level up your trading tremendously. So we're going to first have a look at the ADX so we can understand what information it is showing you, and then we're going to have a look at how we can combine it with different things to find entry points. So if we do find any entry points, we'll definitely take them, but we're not going to be looking for entries as we usually do. We're going to focus on actually understanding this. So the first thing I do when I add the ADX is just change the colors. This is not something you have to do, but this is something that I like doing, and I'll show you guys why in a second. There we go. So the ADX consists of three lines. We have the ADX line itself. In this case, this is the yellow line that you see here. This is the ADX line, and then the green line is the DI plus, and the red line is the DI minus. The reason I like to have them red and green is when the DI plus is dominant, the green one, we can see that price is moving upwards, and when the red is dominant, we can see price is moving downwards. So green candles goes up, red candles comes down. So green goes up, red goes down. This is the reason I like to change my colors to red and green. And then the yellow just makes it more visible to distinguish the ADX line between the DI plus and the DI minus, especially because there's times when they run intertwined like this. Okay, so what does the ADX show us? We're going to start off with the ADX line itself. A mistake that a lot of new traders make is they use the ADX to determine direction. The ADX line itself will never show you direction. Instead, it shows you the strength of the current move. We can see that price is moving upwards here. It has been for quite some time. And since this move began, we can see how the ADX itself was steadily climbing. So as the ADX keeps climbing while price is moving upwards, this is a sign for me that there's a lot of strength behind the current move. So when the ADX is high like this, I will definitely not be looking for sell trades in a move like this. Okay, so high ADX, I will look for buy trades if the move is upwards. And another thing to note is a lot of people, when the ADX starts turning downwards, they take this as a sign that the price will be reversing. This is definitely not the case, as we can see clearly in the current move here. We had the strong push upwards. Price made a little correction and then kind of flatlined for a bit and then continued its push upwards. But the ADX was dropping during this time here. Okay, and clearly price did not reverse and price continued its way up. So when the ADX starts turning and starts dropping, this is not a sign that price is reversing. The same is true for when there's a sell-off maybe see if we can get a better, we had this beautiful drop here, and as you can see, the ADX again was climbing. The more price was dropping, the more the ADX was climbing, telling me that the strength of the current move is increasing. And again, we can see that the ADX started turning downwards here, and price simply continued its way. It did rest a little bit, but it continued its way downwards. So the ADX turning around or going up and then coming down does not signal a reversal. It's very, very important. This is a mistake that a lot of new traders make. The ADX goes up high, and as soon as it starts dropping, they take it as a sign of reversal. This is definitely not the case and should not be considered in any strategy as a way of determining entry points. Okay, so how do we determine entry points? We're going to be using the DI plus and the DI minus in combination with the ADX. The DI plus and the DI minus lines, you can think of them as a rate of change, or they show you the speed at which price is accelerating. Okay, so that's not the strength of the move, it just shows you the acceleration of the move. What do we mean by this? So let's have a quick look. Okay, we had a massive drop off here, a few big red candles, and when this happened, we can see that the way that DI minus spiked up. It did not gradually move up like it does here. For example, we had the drop off here, but these weren't really big candles. It was just basic normal movement basically, and the ADX, oh sorry, the DI minus was just jagged and moving along, showing me it's dominant, and the DI minus was having, the DI plus was dropping off, showing me that we are heading downwards. But when we have a drop off like this, we can clearly see how the DI spiked. The DI minus had a spike there. Same thing with if price suddenly moves upwards, we saw that quick upwards move of the DI plus. And we're going to be using that to determine entries. So what we want ideally is a low ADX. So the ADX will show us that there's not a lot of strength behind the current move, but we are looking for sharp moves and big sell-offs and buys like we had here. So we're going to be looking for spikes basically on the DI plus with a very low ADX. And we're going to then combine that, or you can then start combining that with different indicators to find entry points. Let's see if we can find a decent example. Show you guys ways, some of the different ways that I use it. I just want to find a very, very nice clear example. So when you're trading, it's not always going to be perfect. Your entries won't always be perfect. Keep that in mind. There will be times, it's something you need to get used to and read. But here's a decent example of an entry that we could have taken. Oh, not that much, not that good actually. I'm looking for a really, really good example so that it's very obvious to see. This might actually be something here. Okay, so this is a real-time example that we have right now. Okay, so what we are seeing here is a big drop-off. We can see this massive spike on the DI minus, but at the same time, it did break through the most recent support. So I'm not going to be looking for buy entries here. And we can see that the ADX is now starting to come up. Not the greatest example. I thought that might play out a little bit differently. It's fine. Let's just see if we can find a decent example somewhere. Because quite often I will use this, I will use the ADX alongside or in conjunction with support and resistance areas. Okay, this looks like it might be a decent example as well. Might turn into one, might not. So this was our most recent low, this area here, and we're going to use this as a support area. And what we can see is price is dropping off really quick, and we have this DI spike here. It's at roughly around 30%, 29-30%, and my ADX value is 17%. So my DI value is almost double of what the ADX value is itself. If I get a rejection here, We have low ADX telling us there's not a lot of strength behind this current move. So there's not a lot of strength in this drop off at the moment, but it has really decent acceleration. So we can think of it almost as an empty move. So it's a big move, but there's not a lot of substance to it. It doesn't have a lot of strength behind it. So what we're going to wait and see, if this continues down, it's going to void this anyway for us. What we would have liked to see in this case is the rejection of the support area. And if this did happen, if price did reject here and my DI plus turned downwards, that would have been an area where I would have been interested in taking a buy trade. But we clearly broke the support area here now, so that's not going to be an entry for us. I just want to see if I can find a decent example where everything lined up beautifully. This is a good example. Okay, so price was moving upwards. Price was moving upwards here. It turned back downwards, so it made this fairly decent size correction and continued its way upwards. And so that would have been our first area of resistance. Now we can see we had the drop off and then we had the push upwards again. During this upwards push here, we can see that we had a fairly decent spike. The DI climbed quite a bit. What's the value there? Roughly around 34%, and at the same time ADX value was about 20. So again, the DI value is almost double of what the ADX was. And then we had the rejection here. So this would have been a sell opportunity for us. Not a lot of strength behind the move, but we did have a very quick price change. We had price accelerate very quickly, but without a lot of strength. So we had the pullback. Because this happened just below support, we had a pullback, and we could have taken a sell. We had a sell opportunity there. This is definitely the way the ADX is climbing here is telling me that I will definitely not be looking for any buy trades in this. Okay, so that's one of the ways we can use this with support and resistance areas. If you know how to properly draw support and resistance, it's definitely something you can use. If you're not sure about support and resistance, I did make a video before about how to properly find decent support and resistance areas. Go have a look at that so you can understand that. Another way that I love using it is with the classical moving averages. It's the 50, 100 and 200 simple moving averages. So this is what they look like. And the reason I like using them is because I can use them as dynamic support and resistance areas. If we have a look at the way that price behaves, we can see that quite often price will respect the moving averages, and we have quite regularly have areas where price turns and respects the moving averages. This is not always the case, but it happens often. When this happens, like this year, we had this big DI spike, DI minus spike. We had price push downwards, big DI minus spike, and we can see that it got rejected off the support area of the 100 moving average. As soon as it turned up, we had buy opportunities. So this would have been a decent buy opportunity. There's another one here. We had the big DI spike. ADX itself was fairly low still, so another buy opportunity there. And you will find opportunities like this throughout the day. When price is moving downwards, we can look for sell opportunities with DI plus spikes, and when price is moving upwards, we can look for when price is moving downwards, we can look for sell opportunities on DI plus spikes, and when price is moving upwards, we can look for buy opportunities on DI minus spikes. Okay, so is not a good example really. Okay, so we have upwards movement. We had this push down here, DI spike, more or less. This one might have been better. We had the spike there, right on the 200 moving average, and if we waited to see if price turned up, we did get the rejection, and you could have any one of these candles here. You could have taken a 3-minute or 4-minute sell buy, and you would have been good. So when price is moving upwards, we look for DI minus spikes, and when price is moving downwards, and we can look for DI plus spikes. So when that spike coincides with a moving average, we can take that as a signal for an entry. Okay, so that's one way. Let's see if we can maybe find, just going to have a quick look at a few entries, or sorry, at a few assets, see if we can maybe pick up an entry. Great example of something you want to stay out of. The ADX is really high at the moment, so I'm not going to risk taking trades at this point here. The ADX is super high, telling me there's a lot of strength behind the move, and it's not sure. How can I put this? We had the upwards move, and we had a lot of strength behind the upwards move, but this drop off here, the speed at which the ADX is falling tells me that the bullish strength is dropping off really quickly. So when bullish strength drops off really quickly, I don't want to look for buys, and the opposite, if bearish strength is dropping off very quickly, I don't want to look for sells. Okay, so this is an example of a trade we're just gonna skip it. We're not gonna be interested in this. Let's see if we can maybe find, if we're lucky, we can find one. Like I said earlier, I'm not going to spend too much time actually looking for entries. We're going to look at how we can combine the ADX with different indicators and combine it with more of the popular indicators. The nice thing about this also is that you can use this on different time frames. You don't have to be on a 1 minute chart. Just to show you guys, let's go to a 10-second chart. Might have been a sell opportunity there, but ADX was fairly decent though. Not quite. It could have been a sell opportunity. Remember, as you lower your time frames, we're on a 10-second chart now. As you lower your time frames, I want to say the accuracy at which your support and resistance areas gets hit will become less and less. So we can see that price breaks through quite often, but sticks more or less to the area. It's going to become much less exact as you are as you lower your time frames. But it's possible to use this on 10-second charts. If you're doing 10-second, I would say like 1 minute, 1 minute trades maybe. But you can also, this is not great. Just switch to something else. But again, you can also use this on higher time frames, like 5 minutes, and so forth. 5 minutes is behaving beautifully. Let's see if we can find just a nice example of it. Entry, not this. Okay, so there was this fairly decent example. We had price coming down, hit the 100 moving average. We had the spike on the DI plus, DI minus, and you could have started buying on the second candle here. You could have taken maybe a 10-minute or 15-minute entry, maybe even a 5-minute. But this is how you can use the ADX to combine, how you can use the ADX combined with support and resistance areas. Remember that moving averages functions exactly the same way as normal support and resistance would, for me anyway. Here's another example of a sell trade we could have taken from a resistance zone. Let's put it like that. Okay, so the zone formed here. I'm drawing I always use channels to draw support and resistance, because I use the candle, maximum candle and the maximum wick length. So that will be there, and we can see our price spiked up here, and the next candle turned around, got rejected from the resistance. At the same time, I had this DI spike, DI plus spike on the ADX, and my ADX itself was fairly low, telling me that we had a sharp move, a quick acceleration, but no strength behind the move. And because this happened just below resistance, I could take a sell trade, and we can see that this is indeed this area where price started turning out or turning downwards. Okay, so that's one of the ways, support and resistance, whether it's moving average support and resistance or it's actual support and resistance. Another thing to keep in mind, let me just go to 1 minute, back to 1 minute quick. Let me see if I can find my favorite form of support and resistance. Just want to find a quick example. Give me 1 second. Maybe on the 5 minute here. This is what I'm looking for is channels forming, because this is something that I use actually quite often. Is when channels form like this. Okay, so when channel starts forming, this is also where you can use DI plus and DI minus spikes. So if you get a DI plus spike just before price breaks through the channel, because this is just a normal or just another resistance line, and this is just another support line. The only difference is that they run diagonally, they're not horizontal, but this is still normal support and resistance. So once you see price going into a channel, you can draw the channel in and then look for the areas where price actually hits that channel in future. And then if you do get a DI spike when the channel does hit, or when the price does hit the channel, we can then start looking for entries. Okay, so lots of ways you can combine it with different types of support and resistance. We've got your normal horizontal support and resistance areas. You've got channels. You've got moving averages that you can use as support and resistance as well. Okay, so now let's have a look at how we can actually combine this with some of the more popular indicators. Let's have a look at the RSI quick. And we're going to have a look and see if we can determine if there's any correlation between the RSI and the ADX. Let's have a look. Okay, so we had RSI start going into overbought area. It just pierced the area, but if we look at the way what the ADX itself was doing, it was rising very quickly. So this would have told me that I should not be looking for sell entries. Okay, so remember, when the ADX is climbing quickly, it's telling me that the strength behind the current move, in this case an upwards move, that the strength behind the move is increasing quite drastically. The quicker it's climbing, the more strength there is coming into this move. So in this case, we definitely do not want to look for sell entries. So that's something to keep in mind. But when we look at this spike here, it's not the ideal spike, but it will give us an idea. The ADX was fairly low. It was there at 15-16%, while the DI plus was on 31-ish%. So the DI spike here, or the DI move, was basically double of what the ADX value is. So high DI but low ADX. And then we can see that the RSI hit the oversold area and price turned back upwards. So we can use the RSI to find oversold and overbought areas. This is one of the few cases that I will say you could use the RSI's oversold and overbought. If you watched some of my other videos, you will know that I hardly ever use the overbought and oversold areas of the RSI, and there's reasons for that. So if you want to understand that better, go watch one of the RSI movies, those videos where I explain how I use the RSI as well. But we had the same thing here. We had a low ADX, very high DI spike, and that's at that point my RSI went into oversold. So this is an area where you could have taken a buy trade. Even though it wasn't on support or anything, my RSI confirmed that it did go into oversold, and then price did in fact reverse. We can also, at the same time here, the DI spike was the DI was very high here, the DI minus. RSI did go into oversold, but there's no way we're going to take buy trades because the ADX is very, very high here, telling me there's a lot of strength behind the current downwards move. So again, this is an area where you're not going to take buy trades, and this is how the ADX can help you stay out of bad trades. We had two areas where the RSI hit the oversold area, but on the first hit, the ADX told us it's fine. You can take a buy trade. On the second time here, the ADX showed us definitely don't take a buy trade. Okay, so it's one of the ways I like to filter it. Again here, this is not a trade I would have taken. In this case, it would have been a good trade if you did take a buy here when the RSI went into oversold. But because the ADX is like this, I will not take buys. This is not an area where I will take a buy. ADX must be low if I want to take a reversal trade, always. Okay, so that's one of the ways we can use the RSI. I think let's just have a quick look if maybe we can find an entry. Okay, so good example of a trade we're definitely going to stay out of. The fact that my ADX is this high, and although my RSI is going into oversold, I'm definitely not going to be looking for a buy trade on this asset right now. We had a sell opportunity here. This might turn into a buy trade in a few minutes. So this is the kind of assets we're looking for, because we're gonna have a double hedge here. We're gonna probably see price hitting the support, probably, not necessarily, but it does have potential. Use the wick and body. Okay, so if we do see this candle end up red, we should see the RSI hit the oversold area, and then we should see the DI minus get even higher still. ADX has come down quite a bit. It's on 18-ish, which is good. Anything below 20 is decent. Although there's not a big difference between the ADX and the DI at the moment, so this is not the ideal DI spike. This didn't play out. It didn't give us an entry, but if we did tap the support area and the RSI did in fact hit the oversold area, and we had a DI spike, a DI minus spike, that would have been a very nice buy entry for us. Okay, so combining it with the RSI and support and resistance is, if you get entries like that, even better. Let's have a quick look. Let's quickly add the stochastic in, also a very popular indicator, and we can see that if we look at the stochastic, see if we can find any correlation between the two. Okay, so we had this example earlier. We looked at this with the RSI and then the stochastic as well. So the stochastic turned upwards, was in the oversold, could have confirmed a buy for us there as well. Another thing or another tool that you can use to confirm ADX entries is the stochastic. So stochastic and RSI are both momentum indicators. This is something that people tend to forget. It's not an indicator where you can say that if it's an overbought I can sell, and if it's an oversold I can buy. With momentum indicators, a lot of something that very few people truly understand is the higher your momentum goes, the more difficult it becomes for something to come to a stop or turn around. So when the RSI is usually, when the RSI or the stochastic goes into oversold or overbought, that's usually where I start looking for buys or sells, but as continuation, not for reversals. Let's find an example. Let me just show you guys what I mean, and how the ADX can show me when it's fine to do so and when it's not. Now let's look at the current price movement. Okay, so this, by the way, this is something that I will stay out of now. We had this, this is not a DI spike anymore, so this is something I'll stay out of. Let me see if I can find a decent example of what I mean when I say buy in overbought and sell in oversold. It's not always the case. Just as just as selling overbought and buying oversold is a bad strategy, the opposite is also true. Buying overbought and selling oversold is also a bad strategy just by itself. It's you're gonna have a horrible time if you try to use it like that. But here's an example of where I will look for buy trades. So we had both the RSI and the stochastic go into overbought area here, and then price kind of stood still for a bit. but you will notice that price was above all my moving averages, first of all. Secondly, you will notice that the ADX was fairly high and the DI plus was dominant. And this would have been the entry for me, this area here. So we had both the RSI and the stochastic dip back out of the overbought area. My ADX was still climbing, as was my DI plus. And so when they went back into overbought, this would have been a buy entry for me. So that's how I like to use the RSI and stochastic, because they are momentum indicators. They're showing me momentum. So we had bullish momentum. It slowed down for a little bit, but it continued. So the momentum continued. The momentum carried price further upwards. And because it was, first of all, just above my moving averages, we broke through. Remember I said the moving averages I use as support and resistance. So I don't really care where whether they have crossed, or if they're pointing upwards or downwards. In this case, I don't really care about that. What I care about is where is price in relation to the moving averages. So we can see that it kind of did a little bounce. It did look like it was going to attempt to hit the 100 and 200 moving averages here. It did fail. So when when the stochastic and the RSI turned back into overbought, that would have been my signal to start taking buys, because my ADX was still climbing, the DI plus was still climbing. So the ADX was showing me we are in an upwards move. The strength behind this move is increasing. We have acceleration on the price as well. Remember, the DI plus shows you how quickly price is accelerating, and the DI minus shows you how quickly price is decelerating. So we had the acceleration of price. We had the strength of the bullish strength still behind price. So when the momentum went back into overbought, that would have been my signal to take a buy entry. Okay, so this is how I usually, or most often use the RSI and the stochastic. Okay. This video is turning into a very long one. We haven't found any decent entries, but we weren't looking for them. It's crucial that you guys understand how the ADX works and what it shows you. If you still don't understand it, maybe try rewatching the video. There is a lot of information on the ADX out there as well. It's one of the crucial things is to understand the indicators you are using. I've seen so many people use indicators before, and they don't really understand what the indicator is showing them. All they see is overbought, oversold, and they try to use that as a way to find entries, and this usually ends badly. You need to understand what the indicator is showing you, and if you don't really understand an indicator, I would really advise you to not use it. Study it a bit, practice with it a bit, go read it a bit. One of the things I like to do, and one of the things I like to tell people often, is we have AI at the moment. It's everywhere. We've got ChatGPT, we've got Claude, there's a bunch of them, we've got Grok. Ask the AI, go to ChatGPT, go to Claude, ask them to explain the ADX. And what I like to do is I will ask an AI to explain it to me in detail, and then give me case examples, and then also explain it like I would to a child, like a 10-year-old child maybe. Because what the AI will do is simplify it and use real-world examples to help grasp the concept of what it's trying to say. That is very useful. I really recommend, especially new traders, a lot of people aren't that mathematically inclined and don't understand the formulas behind the indicators always. So if you struggle with that, it's still necessary that you try to understand it, because it is really important. You cannot use an indicator, any indicator, if you don't really understand what it's showing you. Remember, any indicator shows you information, but it's different kinds of information. The information you get from a stochastic is different from the information you get from the RSI, for example. Although they look like they behave the same, it's two sets, it's two different sets of information. It's not the same kind of information. And that's super important that you understand the indicators you want to use. Now, hopefully I did explain this in a way that most of you people will understand clearly. I really hope so. But if you still struggle with the concept, try AI, ask them to explain the ADX indicator to you, even if you have to do it a couple of times until you understand it. It's very important you understand it completely before you actually try using it. Play around with it on demo a bit, but definitely get the hang of it before you go onto a live account. If you want to dive deeper into trading and join me in live sessions where I show working with indicators in real time, review daily setups, and demonstrate how to build strategies with minimal risk, I have a private trading community on Telegram. There we do real work every day, analyzing charts, testing strategies, and discussing results. You can only join by sending me a direct message. I care more about the quality of the group than the quantity of people in it. Contacts are in the description below. This is a unique opportunity to become part of a private trading group where you can actually learn and grow. And of course, guys, don't forget to subscribe to this channel. We do indicator settings here, strategies, and we do psychology of trading. I'll see you guys in the next video, and until then, may the pips be with you.